Good afternoon. This is Tom Alexander. It is Friday, March 29th. It is a little bit after 12 noon in beautiful Charleston, South Carolina. This is the weekend update that I do every weekend. It is free. You can get all the charts that I show and many more by going to the website. Here, I will show you the website. Here we go. So go to alexandertrading.com, weekly update. You can click on weekly update, and then you can click on the previous. You can click on the one for this weekend, which I don't have posted yet, but I will. But if you click on these, then you can go to the details of the weekend update, the stuff that I go through this video. You can download a PDF. You can watch. You can click on the video, see the video, but I post charts, observations, levels, all of the above. If you find value in this, please like and subscribe to the channel. I would very much appreciate it. I will answer all your comments if you have comments or questions. Okay, let's take a look now at the SPX. This is going to be brief. It is Easter weekend. Happy Easter, by the way. It is good. Today is Good Friday. I don't think it's any secret that we're in a bull market. Within the bull market, we are in an extremely strong leg to the upside. Now, this leg began at the end of October 2023, and it is certainly carried into the new year. What you see on my screen here is more stuff than you typically will find on my charts, but I'm put this stuff on the chart just to. There's actually good information on here, and I go into explanation. The written explanation of this is in the report. But what I have basically done here, you can see we're making higher highs and higher lows, and we've been making higher highs and higher lows since the October low. The pattern of since the new year has been basically a dip and rip. It has continued from last week. Last week we had the latest dip and now the rip. Well, okay, if this dip and rip is going to continue, what are we looking at for the potential next top of the rip? Well, if you take the previous legs up, which I've done here, and I have numbered these, it's very clear. Again, if you go to the website, this is the first one, the second one, the third one, the fourth one. And one thing that I noticed when I went through this exercise is that each rip has gotten a little less in magnitude. So maybe that's telling us something about the slowing of the trend. However, even if it's less in magnitude, if the low last Tuesday was the latest dip and it was only 1.1%, then if the rip in progress carries similar in magnitude to the previous rips, you're looking at 3361, 3382. This would be the magnitude of the last two rips higher, and then the previous two this year would project to 5422, 5445. Now, I am not one of the magicians out there that tries to predict every top and bottom in the market. I don't use magic. I use complete, total auction market information. This is my best guess, and it is at least derived from actual trade. There's no magic involved here. Now, more importantly, from a trading perspective, the level that has to come out that would signal perhaps something of larger magnitude than any that we've seen since before last October is in effect, is if we take out last week's low, which is last Tuesday's low. So that's subjective information. And this is the daily chart. I'm going to go down to a 30-minute chart. And if we go to a 30-minute chart, here you go. You can see it's an incredibly consistent, persistent pattern of higher highs and higher lows on the 30-minute chart. It does not get more pristine than this, and which actually makes it quite simple. As long as you're not trying to fight it. If you will let the market signal that a top could be in place, you're much better off than trying to play pick the top and getting run over and run over and run over. The low from the low last week is just a little bit above 52.03. So if we close below 52.03, something may be different this time. Unless that happens, then perhaps we're going to go up yet again into one of these levels up here. We'll see. Certainly, are we, quote unquote, overdue for some sort of larger degree retracement than 2+%? Yes, but if you want to go back and look at what many people are using as an analog, the year of 1995, you will see that the market went up all year long in a similar manner with similar shallow and short-lived retracements as we're seeing now. So there is precedent for this. This can continue. Don't think that it can't and get run over by it. Let the market itself signal that something different could be occurring. And until that happens, the trend is definitively higher. And as of the close on Friday, it's higher in all time frames that you have any business looking at. Okay, let's take a quick look at other stuff. Let's look at the NDX. Everything is pretty much in lockstep. Now, the NDX did not trade to a new all-time high. It has been consolidating a little bit, and it's, I don't know if NVIDIA is the proxy for the NDX or NDX is the proxy for NVIDIA, but NVIDIA has come off its high, and its pattern looks very much like the NDX, as you expect it would. But anyway, here are the levels in the NDX as we head into the new week next Monday. And then we take a look at, let's look at the Dow. And the Dow, of course, traded and closed in new all-time high ground, closing high for the week and the day, week and the month and the quarter. And then we have the Russell. And the Russell is also showing some relative strength, closing at a new high for the rally off the October low. Now, it has work to do to the upside to get to anywhere close to its high in 2021, but it is showing relative strength in this time frame, and that's what is most important. One other chart I'll leave you with is the New York Composite, which is an index of all NYSE listed companies. It's large. It reflects participation, broader participation in the market. It also closed at an all-time high. So what this is telling me is that regardless of any retracement, whether it's 2%, 5%, 6%, 7%, whatever, it's very unlikely that we are seeing the top of the bull market that is in progress. And what you're looking to do ideally is, following some sort of retracement, is to buy this market. That makes more sense than trying to pick the top, and unless you're a day trader and you're trading the intraday time frame, which is its own animal. We have a live trade room, and we play that game in there, but this is more of a swing trade, longer term perspective. The trend is up. At some point, we're likely to get a retracement greater in magnitude than what we've seen since the October low, but there's no sign of it yet. Something else, and I posted this a few weeks ago in the weekend update. You can go back and find that it was 2 or 3 weeks ago. The fact that we're in an election year, and I could not find an election year going back, I think, to 1976 that didn't have several retracements considerably deeper than anything that we've seen. Now, I don't know how useful that is. It just seems, and sometimes logical doesn't always play out, but we're in an election year where there are a lot of moving parts. There's a lot of contention, a lot of surprises, a lot of exogenous stuff can happen, but the market has not reacted to anything except go higher. There is no exogenous event. There is no news. There's no economic report that is not being perceived as bullish. So the momentum for this market is higher. It is remarkably bid. And again, I caution you and encourage you to let the market itself, by doing something it has not done to this point, signal that perhaps a top of some relative significance is in place. Again, whatever top is in place, could be in place or will be in place eventually, I don't think is the final top. So we shall see. You guys enjoy the rest of your Easter weekend. I hope you found value in this. I will speak with you again soon.